I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZB. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor online at stevesaretsky.com. Welcome back to the show, Steve.
Always a pleasure. Thanks for having me on.
Vancouver's real estate bubble and the dynamics of real estate bubbles as home prices rose. Were buyers overcome by the fear of missing out?
Yeah, I mean, I think that was sort of a well-known phenomenon in the market here, and that sort of plays on really any financial market when you start to get rising prices, a euphoric mindset, where people sort of detach from, I guess, what fair market values really should be. Price discovery kind of gets thrown out the window. It's basically, you're just start chasing prices and the expectation that they're going to continue to rise, and you sort of speculate on that. So I think we had a lot of that in Vancouver, and then basically what happened, that was sort of 2015, 2016, and then that really started to spread out the further you go. So, a lot of that speculation stemmed out into the suburbs, into the Fraser Valley, into Victoria, Kelowna. So it really became sort of like a province-wide. I mean, you have areas like Revelstoke right now, where I think they're seeing like 20% price growth. So basically, all that capital and credit that was created and that fear of missing out, that whole sort of euphoria, spilled into other markets. So that's kind of created the situation that we're in today.
Did the fear of missing out cause buyers to take on excessive risk and do whatever it took to qualify for mortgages?
I mean, I think there's definitely an element of that. I mean, I can speak specifically for clients, right? I mean, sometimes they, during the peak when everybody was caught up in bidding wars, they would have a certain budget set saying, hey, I want to spend, $800,000. And that was like their max. And then all of a sudden you're in a bidding war competing with 4 or 5 people. And all of a sudden, you're saying, hey, well, let's put in a bid for $850 because I really want this place. And so, people were going basically beyond their budgets. Really, again, because you have like a fear of missing out. Everybody just wanted to get in, secure a place, out of fear that it was going to continue to rise each month as it was doing. And so that was kind of the reality of the situation.
Was the stress test really needed?
I think it was, just because of the macro-prudential, or sort of the macro landscape that we're in. Keeping interest rates historically low, for the last 10 years. I mean, it just encourages more debt accumulation. When you suppress interest rates as low as they are, it's really a negative interest rate. You're basically borrowing, essentially at the cost of inflation. So the bank's basically giving you money, and when Canadians are already the most indebted household in the G7, debt to GDP is 100% of GDP, 170% debt to disposable income. So, the Canadian debt levels are off the charts. So if you're going to keep interest rates low, below 2%, but you also want to be, at the same time, you want to contain household indebtedness and contain the obscene growth in home prices, you have to implement these stress tests. But unfortunately, I think they actually did it way too late. They should have done it years ago, to discourage this kind of household borrowing. But unfortunately, this is where we are at today. So as policymakers typically do, they're reactionary, not proactive. And it's going to be interesting to see how things shape up here.
Every time there's a bubble, people also get the feeling, this time it's different. Was there that feeling? This time it's different?
Yeah. I've certainly heard a lot of compelling arguments. So what happens is generally, in these euphoric manias, and people get caught up, and in order to justify valuations, in order to actually even get a bubble, you have to create compelling stories. So it's the compelling story that drives the market sentiment and justifies people to pay the prices that they're paying. So, a lot of those stories, in Vancouver, where foreign money was coming and they were going to buy up all of Vancouver real estate, we're landlocked. So, we don't have enough land to build on. There's a housing shortage, immigration growth. So there was a lot of compelling arguments that certainly would make one believe that prices just should continue to rise exponentially each and every year. But obviously, nothing grows, trees don't grow to the sky, and nothing goes up in a straight line forever. And I think that, now we're certainly seeing that with prices coming down.
We'll have more with Steve Saretsky right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Steve Saretsky. Steve, in BC, where did the real estate bubble begin, and where did it spread to?
Yeah, I think it's a good question. I think this is something I've been trying to hit home to a lot of people, because I get a lot of people, reaching out to me and asking me, even though I work and focus a lot of my research is in Vancouver, they'll ask me, well, hey, what do you think about Victoria? I want to buy here, or I'm moving to Okanagan. What do you think? So what really happens is the housing boom really took off, and it was started in the city of Vancouver, and then basically as that grew, as prices grew, it started to spread out into the suburbs and further out from the city core. So you basically get what's called a drive to qualify, where people get priced out in one area, so they have to drive further out in order to qualify for a home purchase. And so that's why you have a lot of people pushing out into areas like Surrey and Burnaby and Langley, Abbotsford. And so these areas, like you take a look at Langley and Abbotsford, those are areas that over the last 8 years or so have been pretty much flat. I mean, specifically for condos, there's been virtually no growth, where all of a sudden, starting in sort of late 2016, prices were ramping up by, they were growing by about 40%. Year over year. So all of a sudden there's just this rampant speculation. So I think that was a lot of people looking at valuations in Langley and Abbotsford and saying, oh, well, these are quite low. They're going to continue to rise. And then we've also seen a lot of capital flight flowing out of Vancouver into Victoria. A lot of people downsizing, cashing out their homes in Vancouver and moving to the island, retiring. Same sort of thing, seeing a lot of young people cashing out maybe their condo and then moving to the Okanagan to buy a single family house. So you have basically, capital pouring out of Vancouver and into the other markets. And as Vancouver corrects, these areas are basically on a lag effect and will correct, as well.
We'll have more with Steve Saretsky right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, as the psychology changes from fear of missing out to fear of not getting out, what does that cause people to do?
I haven't seen too much of that yet. I think maybe a little bit in West Vancouver in your luxury housing market where, depending on who you want to talk to over there, I'm sure each realtor might have a different view of the market, but the general consensus is that, that luxury market's been hit 35-40%. Off peak valuations. So, that, I think right there at that sort of price decline, we're definitely seeing, I think a bit of a so-called fear of a FONGO, fear of not getting out. And that basically is just, it becomes sort of a mindset of, hey, just give me whatever price you get. I haven't had an offer in 6 months. I'll work with you even though it's a low ball offer. That's the sort of dynamic that you start to see. I can't say that I've seen that really in any other areas. New listings, for the most part, are still quite low, so there's no panic fire sales saying, hey, just list my house and get me out of here. But what you are seeing is basically very weak sales, and so that's allowing the inventory to grow quite steadily. But yeah, I wouldn't say, other than maybe West Vancouver luxury, I haven't really seen too much of a panic from sellers worrying about valuations.
In BC, with the real estate bubble contracting, where will the decline start and where will it go?
Sort of brings us back to earlier. I think it starts sort of in Vancouver. Starts usually at the high end. That's usually the first moving market. So generally, if you look at how asset prices move, is generally at the beginning of a price movement up, you generally get the smart institutional money that comes in. They see an opportunity before anybody else does, so then they get in really early. That starts to drive the prices up, and then you generally start to get the mainstream media reporting on it, and then you sort of get your average typical consumer jumping in sort of near the top of the cycle, while your smart institutional money is cashing out. Other people are jumping in at the higher valuations. And so I think that's the kind of situation that's playing out now is we're seeing that in Vancouver. That money is, the prices are contracting here, but they're not really contracting as much out in the outlying areas. Like if you look at Victoria and the Okanagan, those areas are just really starting to slow down now. I don't think you've really seen a material drop in prices there yet. But obviously when you start to see luxury homes, in the nice areas of Vancouver that are generally most desirable, dropping by anywhere from 20 to 40%, it doesn't make as much to pay a huge premium, in Victoria and the Okanagan. So those markets will basically correct because there's always going to be a premium in Vancouver. I can give you another example, that I think is quite important just for listeners to understand. So generally there's always been historically in Vancouver a price premium to own a condo in downtown Vancouver. That's where a lot of the money goes. There's always been a premium to live there. What you've seen is the lag effect of Vancouver condo prices rising. That money poured out into the valley. So right now what you're seeing is closer to new construction condos in Port Moody, which generally trades at a significant discount, is trading around roughly the same price as downtown Vancouver condos are selling for. So really there's very little price difference between what you're going to pay in Port Moody versus what you're going to pay in downtown Vancouver. And so I would argue that Port Moody and these areas like it have to begin correcting and adjusting back down to reality, because there should be, and I suspect there always will be, a premium to live in downtown Vancouver.
In BC, mortgage loans are recourse. What is a recourse mortgage, and how could it affect the psychology in the marketplace?
Yeah, so recourse mortgages are basically, they can come after your existing assets. You can't basically do like in the United States where people just left their keys on the counter and walked out the front door and said, I'm not paying. Here the creditors actually do come after you. They can go and seize other assets, etc. What we're starting to see is a shift and some growth in the consumer proposal segment. So what that basically is I believe it's up to $250,000 of debt, you can actually consult with a creditor and they'll adjust your payments. You can technically actually, in some cases, walk away from your home without declaring bankruptcy. And so we're starting to see some increases in those numbers. And, there's sort of, I guess you could say, some sort of ways around the recourse, so to speak. But that's something that you'd have to talk to a creditor about. But yeah, that's kind of a trend that's developing.
Are condo developers resorting to offering bonuses for people who buy, say, a new car or something like that?
Yeah, we're starting to see that, particularly over the last couple months. We saw a lot of Chinese New Year bonuses with, cars. Some of them are offering free strata fees for a couple of years. Some of them are offering, realtor bonuses, buyer bonuses saying, hey, you buy this condo, we'll also lower your deposit structure and we'll also give you a $20,000 decorating allowance. So this is all basically to ramp up the pre-sales numbers. These developers generally need to hit a certain number of pre-sales, usually around 65% of the building, in order to secure construction financing so they can actually get a shovel in the ground. So that's important that they hit their pre-sale targets just to get the project off the ground. So, in order to do that, because the demand right now is quite weak, they are having to ramp up their incentives.
Steve, thank you so much for chatting with us.
Yeah, always a pleasure.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. You can find him online at stevesaretsky.com. If you have any questions for our guests, you can send them to info@housestreet.com. Find us on Twitter @HoweStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.